Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and look at me with 2 updates in a week. Told you I'd get back in the swing of this thing. All right, let's cover this really quick. We have seen a strong move, 2 strong moves the last couple of days as the bounce has continued. I gave you levels to watch for in the last video. I hope you were heeding those levels, because once they were broke, we saw great opportunities for some trading to be done, whether you wanted to go long or whether you wanted to get out of shorts or whatever the case was. Great opportunities at these different levels that I gave back on the Tuesday video. So if you're following along, if you're keeping track, good for you. If you're not, shame on you. I will tell you, I'm on Twitter. I don't know if I've ever mentioned that, but I am on Twitter under the Stock Mentor. You can find me on Twitter, and then every time I do a video, it'll tweet it. So might be of interest to you guys, in case you didn't already know that. Okay, as we've seen the last couple of days, big push back up in the markets. We had seen this cascading fall of down, then pop up, then down, then pop up, then sideways. This move coming out of Monday into Tuesday, was it Tuesday into Wednesday? Where are we in Thursday? So it must have been Tuesday into Wednesday. Saw a gap up. It all happened overnight. So we saw a gap up into Wednesday. Let me get this all right here. Gap up into Wednesday, and then a straight sideways move all day. It was very, very choppy, very lots of consolidation here. As it awaited the next bigger move, that was when we caught some of this move to the upside right in through here. So Tuesday, gap up, not much. Very difficult to play too. When the gap's up 8-10 points overnight, what do? Do you go long? Do you go short? It's very difficult to play that. What we got today was a beautiful opportunity to set things up for a nice trade, even from the very start of the day. We opened up basically flat, and then once the punch to the upside started, it was non-stop. Very, very hard, consistent push upwards all day long. Looked like a wave 3, could be a wave C. I'm not going to get into the Elliott wave stuff here for just sake of time, but just a very strong move by the bulls. Here's the point of it now. Where did we end up? Everything ended up at overhead. It all ended up at overhead resistance. You'll see that as we push forward. I'll bring that to your attention. Also keep in mind that Google reported after earnings, or after hours, and it was good. Google earnings were great, and at last check, Google was up $1. Yeah, it was up $1. This is why if you followed me for any length of time, you know I don't like playing earnings. This is exactly why. You just don't know what you're going to get out of it. I mean, is it more often than not that Apple reports, it reports well, and then it gaps up $1 billion? Yes, that happens quite a bit. But there's those rare cases where nothing happens. There is no earth-shattering kaboom. This was Google. If you watched it, it was fun to watch. In the after hours, it'd be up $5, and literally the next second down 8, and then up 2, up 3, down 10, down 12, up 1, down 5. It's fun to watch. But when the dust settled, it's up. As of right now, it's up about $1. It just wasn't a lot of movement to it. And the NASDAQ did the same thing. Go back and look at it. If you guys understand or know how to look at the futures on a chart, go back and look at the NASDAQ futures on a 1 minute, and you'll see the volatility. It covered a lot of ground very quickly, and overall, it didn't go anywhere. Even into the after hours, it's very stale, very stagnant, just kind of meandering itself around. It's boring. So no big action there whatsoever after the Google earnings. Banks report tomorrow. I think it's JP Morgan and Wells Fargo both report before the open. That can make things very interesting. Make sure you're watching that, especially if you're in some sort of trade overnight. I am in the futures. I'm actually short the futures as it is right now, but I'm not sure I'll be holding that in into tomorrow's trading. I just we were up quite a bit. I think we're due for a pullback, and we are getting the pullback I was expecting. We're already down about 2 points or so in the after hours. But if the banks report well, the S&P will benefit the most from that. Okay, so keep that on your charts as we enter tomorrow's trading. Just keep in mind that if the banks report well, we could see a big pop up. If they don't, we could see a big gap down. Otherwise, we'll see a Google moment where we won't go anywhere. It'll be up and down, and then overall it'll be nowhere. Just keep this in mind. At the end of today, based on the chart we have in front of us, ignoring the futures and ignoring all earnings that are coming out, we are back to overhead resistance in everything. So here's the Dow on a 60-minute, right back to the 50 period on the Dow. Pushes back above 13,000 and 13.1. Now we're talking even more bullish sentiment coming back into the markets. 13.3 being the overall, that's the big dog, that's the big picture, that's the one everybody's really watching. Lots of stories. Will we break it? Will we not? It could go either way. I won't go into that right now. It's way too early. But I will tell you to watch for 13 and 13.1 coming into tomorrow's trading. Otherwise, it's really back to this 12.7, 12.8 area to the short side. It is Friday. Expect a couple hours of maybe good, decent trading in the morning and then flatline the rest of the day. That is very, very, very typical for a Friday trading session. Here's the daily. Back to overhead. 50-day moving average on this case. Yes, the volume was only okay. The internals did confirm today, but the volume was only decent. It's all right. But all the way back up. 200 points, not a bad move. It has brought it all the way from 12.7 back to 13,300 points in the course of 2 days. Keeping in mind that we wiped out a bunch of this stuff in the course of 5. So things can change and change very quickly. This may also get pretty volatile into next week as it's options expiration week next week. So be cautious of that coming into next week's trading. But here, right back to the 50-day moving average, same levels I just gave you apply to that. We'll move on to the NASDAQ. Here's the little pullback. Look what we've seen. This looks very bull flaggish. Looks like we may have broke that bull flag today, back up into the 50-period moving average. As you can see here, back to overhead. Have we not been talking about that? Let's look at the daily. Go, look at that. The 20-day moving average. No way. Back to overhead. It's all over the place. Everything's back to overhead, guys. So, will we gap and go? I mean, if you can't beat it, gap it. So will we gap up and over it tomorrow? Or, once again, will we see a push down from here now that we've all come back to overhead? I really think a lot of it will hinge on those bank reports in the morning. So, I don't know. I don't even want to guess at what they're going to do. I would be surprised maybe if they came out really, really bad, but who knows? I'm just gonna wait till tomorrow morning and find out with the rest of you. So no guessing. I would recommend no guessing for you guys. Just wait and see what the market gives you. NASDAQ weekly, also way down. It was all the way down into 2,700 area. Notice how it's pulled itself all the way back up. So we'll see what this looks like tomorrow. More bullish sentiment keeps the bulls in charge, even on the bigger time frames, as this thing tries and scrapes and claws its way back up. We'll see where it closes tomorrow. SPX 60-minute. Here was the break of this line here. And look, I don't know, back to overhead? Yeah, gee, go figure. So here's the 50, here's the 200, something I'll bring to your attention. If we get some sort of a move down tomorrow, but it's kind of muted of about, I don't know, 7 to 8 points, that'll put us back at the 1380 mark, and if it starts to stay there, guess what we're going to get? The opportunity for an inverse left shoulder, head, and right shoulder forming if we get some sort of a move down tomorrow. If it's a major move down and it's back into 75 or 70 mark, okay, I'm probably not going to pay much attention to it. But if we do move down tomorrow or even sideways, this will be the thing to watch over the weekend. Here, once again, talking about inverse head and shoulders, and once again, right back to overhead on the SPX 60-minute. Here, it's stuck between the 20-day and the 50-day. Any further push to the upside, love, love, love the 1400 area because it is the 20-day moving average on the SPX. So we'll see if that makes any kind of difference as well. VIX way down, confirming what we saw in the markets today with the push way up. The VIX weekly way down, confirming what we've seen in the markets over the last couple days, which is up. So I still like the look of this VIX. It still kind of appears from a technical standpoint that we are rolling under here on the VIX. And the higher the VIX goes, usually that means more bearish the markets are. But until we get up and above 20, and I've talked about this a billion times in the past, I'm not sold on the bullish or the bearish move until we're up and closing consistently above 20. We're still not there. Still plenty of complacency in the markets as it is. FAS had some moves on this. Got the gap up here on Tuesday. Here we see on Tuesday into Wednesday. Wednesday was sideways. Here's Thursday. And now you can see coming right back up and into overhead. Where's the overhead, you say? Well, I need to move this line, but it's at 104. If you go back to last week, I was talking about a move below 104 or a move back above 114. As it is, we came up and hit 103.65, so 104 is our overhead resistance area on FAS. That'll be your area to watch closely into tomorrow's trading, especially because this is based on the financials, so you can bet this will have some movement to it based on what the banks or how the banks report tomorrow. So keep in mind, yes, we can go up, yes, we can go down, but we can always go sideways if the banks are within where they thought it would be and it's not that big of a deal. It's possible that we won't even go anywhere. We'll have a Google moment and it'll just wander sideways in the morning and it won't be any big deal. But you need to be conscious of the fact that some banks do report in the morning. Could play a big factor in what we see in tomorrow's trading. This will, of course, affect FAS. Here's the daily, back down below the 50-day, the gap up, reclaimed the 50-day, the move today definitely reclaimed the 50-day, stuck between the 50 and the 20 now as it comes back into this overhead resistance, which is marked very nicely, I think, on the daily. This shows it pretty well. Here was that little consolidation, the bust down and through it. So the bears had a great opportunity to really drag this thing lower, and they just went, yeah, whatever. And the bulls drug it right back up. So always like to give the other side a couple days to, or at least a day, one day, to reclaim some lost property. The bulls were able to do it very quickly in reclaiming the 50-day moving average. That'll be your areas to watch going forward. Just as we saw the FAS going up, the FAZ, of course, going down back into this 2150 area and holding there for the time being. We'll quickly flip to the daily and just show you this is my bigger picture. We're still stuck in this channel. We got caught below the 50-day. We're stuck between the 50 and the 20 as everything else is from the SPX to FAS to FAZ. Really watching for breaks of this major channel. This will be the big dog. You're looking for pushes above about, I'd say, 26, 27. Then you need to start getting real interested, I think, in FAZ. So, or if you're Canadian, FAZ. That's for my buddy Jason. Back below 20, guess what? Just more down to go. So that would probably precipitate a higher push, a much higher push in the markets, maybe even past or back to their highs. So that might be a little ways off. But these are the areas you're watching from here on in, 26 and 20. Those will be your big areas to watch on the FAS and the FAZ, especially with the banks reporting tomorrow morning. There you go, guys. Now you're all caught up. So going into tomorrow, I think you know what I'm looking at. I think you know what I'm looking to expect. Where gap up, banks report tomorrow, so gap up, gap down, gap move sideways. I really don't care. I have my levels in place. I know exactly what I'm looking for and looking at. Kind of gave you some of those to work off of going into tomorrow's trading as well. Wait for those breaks. That's where the more cautious trading is at. Risk management. Risk management. Always keep that in mind. So don't get caught in a trap where, oh, this thing's definitely going to go down. It's a great way to blow up your account. Got to be very careful. Good risk management. Okay, guys, I'll be back with you again. It'll probably be next week sometime. Tomorrow's Friday. Not much to talk about then, so it'll probably be early next week. If you like the videos, check out my subscribers section. $28 a month, buck a day. I do these every day except for Saturday. A lot more detail, a lot more lines. I talk the Elliott Wave talk. We go over gold, we go over oil. We have individual stocks that we follow during the course of any 1 week. Those change from week to week. I do all of the indices. I do the Russells. I just talk about a whole lot more in those. So it's really try it out for a month, see what you think. It's really well, I'm a little biased, but I think it's a very good investment, especially if you're a trader that does it on a regular routine. So when I was first into trading, I was very high on people that did free videos like what I do here, but quite honestly, I didn't realize how much I was missing out on with some of the subscriptions that were out there. So I would hope that you'd find the same thing. That these free videos are great. They're knowledgeable, or they're good. They give you a good bit of knowledge. But I think the subscribers video would be of great interest to you as well. If you like these, I really think you'll love the subscribers video. The other thing is, if you really want to learn how to trade, it's the mentoring program. You can talk to me about that. That is just coming into its April session right now, so we're getting started with that. All of these sessions, I keep talking about the April session, which kind of makes it sound like it's a group thing, and it's not. It's an individually based program. It's just you and I. There's no videos. It's all live. It's all one-on-one. It's you and I working together to make you a better trader, and it's more comfortable for everyone because you don't have to worry about, well, I want to ask a question but I don't want to feel dumb about it, whatever. It's just you and I. So it's a brilliant course. It's really well made up, really good, loaded, packed full of theory and information. So for those of you that are analytical, I've for some reason been attracting a lot of what I'm trying to think of. Let's see, I'm trying to think of what their profession is. A lot of engineers. I've been attracting a lot of engineers lately who are very analytical, and I think they're going to love this course. So write me, call me about that. We can talk more about the mentoring side of things. And otherwise, we'll see you again here coming into early next week. Options expiration week, keep that in mind. And we'll pick up things again probably on Tuesday. Have a great one. Bye.